Okay, welcome everyone to another support and resistance training video. And in this video, we're going to be taking a look at 5 specific tips that I've got for you guys for support and resistance that'll help you all learn the concepts, apply them to your trading, and make money. So let's go ahead and dive right into that. So we've got 5 support and resistance tips. All right. So tip number one. Tip number one has to do with identification of your levels. So tip number one is use significant numbers. So what do I mean by use significant numbers? Well, if you look over here to the right-hand side of the screen, you're going to notice that there are numbers for your scale. These numbers are the significant rounded up whole numbers for this given pair. Now, when you think about conceptually about what support and resistance is, it's ultimately a form of supply and demand where you have inherent barriers in the market created by order flow. So when you have a resistance, typically what you find is that you have sell orders there. When you have support, you find that you have buy orders there. And when support or resistance breaks, traders come in, almost like a self-fulfilling prophecy. So when you think about people placing orders in the financial markets, a lot of the times they don't go in and say, I want to buy at 1.382734. Okay, that's just not necessary. It's too much. They come in and they say, I want to buy at 1.37, or I want to come in and buy at 1.373. If you think about when you typically think of exchanging money, you have dollars and then you have cents, and there's only 2 decimal places for the cents. It's $1.39. It's not $1.39 and 4/10 of a cent. Okay, and then on further and further. Now, of course, in Forex and many other financial markets, you're able to go down to incredibly small percentages of whole numbers. But when you take a look at actual support and resistance, what you'll often find is that if you use significant whole numbers, you're more likely to have the actual accurate inherent barrier in the market where orders are being filled. So what I'd like to do real quick is shift this over to a chart so that I can show you practically what that might look like in the actual market. Okay, so here we've got Euro USD pulled up on the daily time frame, and let's just quickly take a glance at this resistance up here. You can see we're noting that price is getting rejected. Okay, so we know that there's a resistance up here. What we're unsure of is where our resistance line goes here, or maybe here, or maybe here, or maybe even here. So if we're trying to figure out exactly where this line goes, and maybe we've gone back and we haven't gotten clarity, well, if you come over here and you look on the right-hand side of the chart, it's done some of the work for you because it's telling you what these significant numbers are in the market. So if you look at where we're at right now and you look at this zone right in here, so we believe that the resistance is somewhere in this zone. What's the whole number on your scale within this zone? It's 1.25000. That's the most significant whole digit number over here in this area. So what we're going to do is we're going to put our support and resistance level at 1.25000. All right, and that is the support and resistance level that we are going to trade in the future. Let's look at another example. So we've got support in here in this area. All right, now we don't know if our support and resistance level should go here or if it should go here or somewhere in here. So let's take a look. Well, if you take a look over here, you'll notice that 1.2000 is the closest significant whole number in this region. So what we're going to do is we're going to change this to 1.22000, and voila, that is your major support and resistance level. Let's do another one. Down here, we've got support. It looks like it turns into resistance in this area. We're not sure whether our level should be here, 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 here. Where in here does this level go? Well, if you take a look, it looks like 1.18 is the most significant close whole digit number. So we're going to put this at 1.18, call that good. All right, so not only is this a way to help you identify the correct support and resistance line, it's also a helpful way to help you uncomplicate it. It takes a lot of the guesswork out because the numbers are there given for you. And the key part about this tip is that this is actually helping you get the real correct support and resistance line in the market, because it's often deceiving. You might see reactions around a specific price point, but it's that specific price point that's causing the reaction. So even though up here you see that there are wicks above this level, and on a lower time frame those are solid candles, it's the 1.25 price point that's actually causing this resistance. So having the psychological numbers marked helps you identify the real accurate inherent barrier in the market. All right, so that was tip number 1. All right, let's go ahead and move this down here, and then we'll say tip number 2. Don't overcomplicate your trading. Now, tip number 2 is very important, and we're going to see a kind of common theme here in the trading platform. Don't overcomplicate your trading. It's been touched on already in other videos, but you don't need 100 different support and resistance levels on your chart. You need the immediate major resistance above price. You need the immediate major support below price. And then I personally normally will mark the one after those as well, and that's about it. There's not any need to go through the market, mark every single support and resistance level that you can find. So again, I want to take you into the market and show you an example of how I would personally mark up support and resistance on my charts live to trade and make money. All right, so for this example, let's say that price is right here. Okay, so price is right here. So ignore everything to the right-hand side. Price is right here. So in this case, if we're right here and I'm looking to mark my support and resistance levels, I'm going to mark the immediate important resistance level above my head, which in this case is right about here. And remember, we just talked about psychological numbers, so we're going to go ahead and change this to 1.2. I'm going to mark this level. Now we're going to mark the immediate support beneath us, which is right over here in this area. And I'm looking at, let's see here, I'm looking at this, I'm looking at this, these interactions here. Okay, so we're going to mark this level, which is at 1.17. And then I'm going to mark the level that's just beyond these. So let's clone this. The next important level to the upside here for me is going to be right here in this area at the 1.22 point. So 1.22, get rid of these here. And then the next important level to the downside, let's just clone this. The next important support, scroll back, it's going to be off in this area right here, which is 1.13 over there on the right hand side. So 1.13. Okay, now that's it. That's all I'm going to mark. I'm not going to overcomplicate it by throwing on all of the minor supports in here. I can. There's a lot of different support levels that I can choose to mark in here. I can mark this one, this one, this one. Let's see, there's this one, that one, that one. I can mark a ton. But how am I supposed to trade that? That's too much. It's too confusing. It's unnecessary to make money. So again, just to be clear, what am I doing? I'm marking the immediate resistance above my head. I'm marking the immediate support beneath my legs. And then I'm marking the next relevant level so that I understand, hey, when we break this resistance, I know that our next important level is here. And hey, when we break through this support, I know that our next important support is here. That's why I do that. Everything else is unnecessary. So that was tip number 2. Don't overcomplicate your trading. Leave it nice and simple. Don't overwhelm yourself with simple support and resistance levels. These are meant to be a simple and easy concept. Don't stress over whether or not you have the exact perfect level. Again, remember that they are zones. Don't stress out over that. Focus on the concepts and focus on the actual trades themselves. Tip number 3. Tip number three is that in an uptrend, all resistances must break. And in a downtrend, all supports must break. So what are we talking about in tip number 3? So tip number 3 is designed to help with the actual trading of support and resistance levels. So the idea is that a lot of people struggle when coming up on a support and resistance level because they don't know whether or not they should trade the bounce or if they should trade the break and what they should be looking for. So this tip is kind of an introductory tip to help with that problem. Now, there are a lot of things that you're going to learn at a later time that's going to help you really trade those levels with high efficiency, but this is a great start. Simply understanding that if price is moving up, so let's take our example here. If price is moving up and we have a resistance level above our head, well, if price is bullish and we're going to remain bullish, then what's going to happen to the resistance? It's going to have to break. And when it breaks, it'll become support and we'll continue on. That's the idea. So if we're coming up to the resistance, ask yourself, do I want to take a short position from this resistance knowing that we're in an uptrend? Because what I'm betting on at that point is that the trend is going to end. So ask yourself, are you wanting to bet on the fact that this trend is going to end and actually reverse and that resistance is going to hold? Or do you want to wait for the resistance to break so that you can buy it at support and trade with the trend? The idea is that anytime you counter trend trade, you're setting yourself up for a higher probability of failure. You always want to trade with the trend, with the big boys. So if you're in a bullish market, an uptrend, and you're coming up on a resistance, so this is our resistance here, you need to be careful looking to sell at that resistance, knowing that you're in an uptrend and knowing, tip number 3, that in an uptrend, all resistances must break by definition. Okay, so keep that in mind. And then, of course, we can flip this around. And if we are in a downtrend and we come up on a support level right here, you have 2 options. You can buy off the support, or you can wait for the support to break, retest as resistance, and then sell it. If we're in a downtrend, then what should you do down here at support? Exactly. In general, it's a riskier trade to play this right here, to play this bounce. It's a riskier trade because if the trend simply continues, which it normally will, the support will break, it'll hold as resistance, and price will continue on and you'll lose. So the best bet in this case is to simply wait for that to happen and then trade that support. Once it becomes resistance, continue on in the trend. So tip number 3, in an uptrend, all resistances must break. In a downtrend, all supports must break. This tip right here is designed to help you understand what you want to be looking for at any given support and resistance level and help you maximize the efficiency and profitability of your trading. Now, on that same note, tip number 4. Tip number 4 also has to do with trading, and tip number 4 is do not use support and resistance alone. Confluence. That's tip number 4. So, what does that mean? As you've seen already, support and resistance does not work 100% of the time. It works enough for you to be consistently profitable, but there are losses. Now, if you want to be highly efficient, have a lot more winning trades than losing trades, make good money, increase your lot sizes, and really have an impact in your life, you're going to need to learn how to use confluence in the financial markets. This is the key to trading successfully. You're going to have to learn how to use confluence. And what is confluence? Confluence is taking multiple different factors and putting them together to tell you a whole story. So our education platform is designed to teach you all of the different important tools that you need and how to put them together to ultimately trade successfully. Support and resistance is only one of those tools. So if you're relying on only support and resistance, yes, you can be consistently profitable, but you will be crippling yourself. So if you are struggling in your trading, or if you even simply just want to be more efficient, one important tip for you when it comes to support and resistance is to not use it alone. All right, and then tip number 5, the final tip have for you guys, it's very important. Tip number 5, it's by far the most important tip on this screen: practice. Now, a lot of people are going to disregard this tip and think that it's not as powerful and important as it is, but I can't stress this enough. It is not enough to watch us mark these up in front of you. You have to be able to pull up a chart on your own, look at it with your own eyes, and place those lines with your own eyes. Enter those trades with your own eyes. It has to be you doing it. Watching us do it is not enough. I always tell people that Forex, or any kind of trading for that matter, is most similar to mathematics. If you remember in mathematics, it wasn't like biology or history where you just simply memorize facts. It's not enough to memorize that you buy at support and sell at resistance. No, trading is more like math. In math, not only do you have to memorize the formulas, you then have to go and practice using those formulas with all of the different types of numbers and equations and setups that you could run into. Only at that point are you actually good enough at that subject to do well. And trading is a lot like math in that regard. You have to not only memorize and learn the content, you then have to be able to practice with it so that you can apply it in different market conditions. So tip number 5 is to practice on your own, identifying the correct support and resistance levels and trading those support and resistance levels, because analyzing and trading are two different things. So I hope you guys got value from this video, and what are you waiting for? Get to practice.